Welcome to TradeTheMBA.com. This is John. This report is for the 26th of July, and well, we were waiting to see if it was going to break down, and sure enough, that began yesterday. The magenta dipping here below 33 level, and at the same time, that puts it under yellow, which is still rising. So from that standpoint, we're going to get a little mix of action, but clean DOC spread right down here where shorts spike up, midterm buyers falling. It's coming off of red DOC being above negative 7.5, so that makes it very simple for us because we have this beautiful 50% level right there at 39.21. Slide that over there so you can see it way down, and that becomes pretty straightforward. But I think there's going to be a lot of action in between. Of course, on the upside to that is the 61% at 39.88. So kind of caught in between that range. And this is what we've been trading the last couple of days as we started to see things a little bit level out. No increase in our gold shakeout reading. So once that plateaued, sort of the momentum of everything kind of faded, but we're still rising shakeout in that. So it hasn't completely converted, but we've got the earliest indications of self configuration taking place there. Of course, we said the NASDAQ would lead things, and the readings for the NASDAQ are far worse from at least an MBI reading, and also DOC, but again, long-term buyers still kind of providing that back support, and we do have rising gold from shakeout on the NASDAQ. So again, I think the NASDAQ again is still leading the charge here, and will determine how able we are to hold support. It's above at 61%, so considerably better than where the S&P is. So I think that becomes sort of a directional indicator here, as we can see that it's already put in that sub-configuration the other day, and it's compounding with that as we speak. And the market's not down much in pre-market 12, so it's hardly significant. The euro, it doesn't stand a chance, but they've done a really good job of holding it above parity. Let them continue to try. It's back and forth because we had the EU softening some of its requirements for purchase of Russia's oil and things like that quietly, not really making big headlines, but then we had the announcement just the other day where the flow has been further reduced. So now, while the Russians see that they have the upper hand and really don't need the resources, can literally just play with the West, because with these reduced flows, Germany already knows they can't survive the winter, and they're already moving to their multiple tiers of cutbacks and restrictions. So not going to be a fun time winter-wise for the EU, and how that impacts the business. We already know that the summer recession, much like the U.S., but much more severe just because of this energy situation. That's really not doing much for oil standpoint, because again, the rate of inflation, while maybe declining with a little bit softer oil, by no means has any of that changed, and the fact that we've seen this decline is this expectation for deflationary pressures, which I think is optimistic at best. And from the oil standpoint, still right around that 100 marker, just below. Wouldn't take much to see a spike, and if we do get that spike over 100, then of course you're going to look at the re-acceleration of inflationary pressure. So as long as it holds down underneath here, though, that provides some relief for rate of change, at least not getting the maximum from it. And treasuries being bought up really big, which is dragging yield down. And this is an indication that some of that free money that's out there is not moving into the market, but moving to more safety. And that's a bellwether, it's an indicator. And you also see this within the cryptocurrency space, where everyone's expectation was that Bitcoin would be taking off, and whenever it hits a sell, there's been plenty of supply to the downside for that. So having gone from the 23 all the way back to the 21, and still looking weak here from a pivot standpoint. Based on that 60-minute daily isn't much better. Even pre-market here, you can see from ETH, Ethereum, pretty clean, just trades beautifully because of its larger volume. And of course you hear all the comments about the new elements that are coming into Ethereum and that, and how it's going to support and help. And all that may be true, doesn't necessarily mean that it's going to create maximum return on the investment. So a lot of back and forth here within the 50K readings. Was pretty much stagnant, flat to lower. But intraday, really some beautiful stuff. We had talked about this one in the video report from yesterday where we had the positive streams marked them. It was so straightforward. As soon as the sell decline came through, boom. And then as we got towards the 50%, you got to look there and see if you're going to get any support. In this case, there was zero support turnaround from there. It happened a little bit later where we got the blue crossing above the gray and then magenta right here moving above but below the 23%. So this becomes one of those where I then look for my orange. I mean, I'm looking at taking the move down to the previous algo level, which was right down there at the 39.57, and willing to attack if I get weakness signal on a bounce from there. Not necessarily looking for a long in that situation simply because I got red leading and I know it's likely to be short-lived. So that just depends on your risk appetite. Maybe you want 4 or 5 extra points going to the upside. That's definitely going to occur there. You just know that it's going to probably end pretty quick. And in this case, he had the space between 23 and 50 to reach the 50 and started putting in the short. But then we had one of these. These are the kind of a nightmare situation where you've got bullish indications, but back and forth weakness going as it comes across, because every dip of that magenta coming back is just a horrible condition for a bull. And then once the blue is below there, then you're pretty confident that you're going to end up with that sell signal. And in this case, took it all the way to the zero marker. And then produced a turnaround here. It was just a matter of, I look then when I get these middle crosses to see if they've got orange dipping. Usually if it's a move that takes me anywhere below the 7.5, even if it hasn't dipped quite below the red, to me that's a good recognition for a cover point at a minimum. And if you want to start to explore the longs, then you start to look for the key levels. In this particular case, we had the algo and also the 23% pretty darn close to each other. So it's one of those where bounces up, you've still got your magenta, then it's like you jump on that, and sure enough, that was a nice little ride going forward there. And then as we moved towards back in the day, we started building up a little bit of supports, but then sell came a little bit later part of the day, filled back that previous algo from before, and then right back to the exact same 39.57 range, which clearly seems to be that pivot range, because we went back and forth just below it, and then it shot up right at the end of the day above it, but as you can see, filled it all the way back in the middle of some weakness right now. All good. Really think that there's just a lot of uncertainty with what's going to be coming out from the Fed. Of course, the White House says that we're not in a recession, despite the fact, 2 negative quarters of growth, blah, blah, blah. Just ignore reality and listen to what they tell you, and you'll be good. Maybe that works out, maybe it doesn't, we'll see. I think that the market's going to have some issues with the potential of how severe things can get if the Fed really is determined to drive inflation back under its 2% target, ignoring the time that's needed for absorbing rate increases. And that's always something that they've been slow to understand. Literally, you need 4 to 6 months between rate increases to work through and absorb. But if they were so far behind the curve starting this, that the catch-up is much harder, because when you do it too quickly, the disruptions that you create, and you're seeing it in all sorts of areas, really are problematic. And this is something that you would think that, grown-ups who are supposed to be the smartest in the room would have learned from all the times they've done this in the past, and always works out poorly. So, go figure. Anyway, look for me on the Skype chat. I'll keep putting updates and charts on there for relevant details. Trade well. We'll talk to you later.